The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. And when we talk about our code, we talk about choice, organization, direction, and education. And we help hundreds of advisors across the United States, whether they're insurance advisors, attorneys, CPAs, mortgage brokers. We use a collaborative approach on helping people with it and provide solutions. My expertise is in life insurance, disability, long-term care, annuities, and life settlements. If you need to sell your policy and, it's not working for you anymore, or, you can't afford it, so we can do that as well. And through this integrated approach, we work with a lot of great people. I call them financial partners, because you need a team. Everybody needs a team. If you don't have a team, we'll help put one together, but you need a team. We are completely independent, represent 30 different insurance companies. We have career insurance people come to us with products that they can't sell. And with us today, and we got some great music in the background because it's the holidays. I hope that comes through on the radio. We have Bobby Tollin with us. Say hello, Bobby.
Hello out there. Thank you, Neil, for having me.
Yeah, I'm thrilled to have you. Bobby, I just met Bobby, but I already know, we know each other we're kin. We know each other for centuries, it seems.
We have a lot in common.
Yes, we know the same people. It's crazy. You travel in the same circles, and good people know good people, and I'm thrilled to have you today.
Thank you.
So Bobby is an expert in the area of mortgages, in not only setting up your first mortgage, but maybe even doing a reverse mortgage or equity line of credit or home line of credit, and we've talked about that, on the air about being liquid. But today, Bobby, you've been in it for 25 years, right?
Yeah, this is going to be my 25th year. I got licensed in, October. I was right after 9/11. Kind of had a coming to Jesus moment as a Jew, and wanted to change my life, and I got into the mortgage business after spending my education, getting my master's as an occupational therapist. And
that's crazy.
I recruited my younger brother into the profession, and then I left the profession. So it was
wow,
it's a crazy time.
Yeah, listen, we all take interesting paths in life, and I was thinking about that on the way in today, because from generation to generation, things are so different. I was talking to my son last night. I think you met my son at a holiday party, and he's 36, 35, and him and his friends, they have such different perspectives. I remember when I started in this business, we didn't have cell phones.
That's right.
I had a whole bunch of maps with me, right?
Yeah.
And had to go around find somebody's house. I had to look on a map. I remember when I first came to New York and driving, from New Jersey to New York and driving over and oh my God, there's 17 roads. Where do I go?
I remember, yesterday, I grew up in Suffolk County, and I was kind of sheltered, didn't really leave Suffolk County too much. Right. And when I started driving, and I had pretty poor sense of direction, I ended up in the areas I shouldn't have been in, and I just didn't know where I was going.
So now the kids all have cell phones, right? So like my son said, so if you went into a town and you wanted to find a sushi restaurant, how'd you do it? Well, we had to find a book with the yellow pages and, We didn't have sushi restaurants back then for whatever reason.
But for some reason, life was simpler, wasn't it?
Right. We had payphones, right? Payphones. He did remember using a payphone. We had that discussion last night. But money is different. And money is very different because he doesn't carry cash.
Right.
And my wife asked me last night, "Oh, don't you have a checkbook with you?" I go, "I can't remember the last time I carried a checkbook."
Yeah.
And kids, they don't know how to write checkbooks. And this is where I'm coming to. So now the age of buying their first house now, the average came out at 40.
Yeah.
That wasn't us. And I say, and I hear these kids complaining, "Oh, I have a good job. I'm making $100,000. My significant other's making $100,000, and we can't afford to buy a home."
Yeah.
How often do you hear that?
All the time.
Right.
It's common, especially
Why?
here in New York. What? Well, spending habits, right? Like people want to say, well, the cost of housing is so much higher than it was when you and I purchased homes, right?
Right.
And that is true. But incomes are certainly, people are doing well. They have strong incomes, like you said, but they're not saving. You know,
saving. See,
they're
that's
not
the key.
saving.
Okay,
they don't know where
so-
their money's going. Like you said, like this very different when you take out paper cash and you have to pay for cash. You feel the money.
This is what
you
I was.
feel it.
You know
Credit
what?
card, you don't feel a credit card. It's just my kids. It's horrible what we're doing. I think with
This is why casino. See, this is what I was thinking about all morning long. You go to a casino, you hand them a couple $100, and what do? They give you a bunch of chips. Once you're in there, you got chips. You don't have money.
That's right.
So you're playing with chips. So now, not only do they not have checkbooks on them, they don't carry cash. My kids and his friends, they don't carry cash. They carry cards. So everything is spend, and saving. They don't save.
Right.
Do they check their credit? Are they using credit cards or are they using debit cards? I don't know. You probably have more of an insight than I do.
I do. I just got, you got me on at a good day. I just got back from Michigan at a training from United Wholesale Mortgage where I was with 9,000 people through 1.5 million square footage of air conditioned space. So, and you had people that were in their 20s and 30s and 40s and 50s and 60s. And there was a question asked by the CEO, Matt Sheba, a very impressive individual. And how many people ask him what they spend their money on kind of thing. And things like DoorDash and these, I've never used it. And what's the other one? Grubhub. And, these kids though today, it's not a big, it's commonplace.
No.
And so when you look at what people spend, right, what's going out, and they don't budget.
Don't know.
There's no budget. There's no budget. Basic budgeting. And the problem really is with education. My daughter's in the 8th grade.
Yeah.
She should have a class right now on budgeting. It's
right.
It's not in the program. It's not in the syllabus. I don't believe in high school and in middle school.
It's budgeting is key. It's an instant society. You go to the restaurant, you go to the, as I said this on a show a couple of weeks ago, my kids come home, they go to the bagel, they get bagels. Okay. They'll get a bacon, egg, and cheese sandwich, whatever it is. Okay. $10, $20.
Right.
Like nothing.
It's eggs.
They give them a card.
Yeah, that's probably the biggest margin is.
But you buy a dozen eggs, you buy some cheese, you buy bread, you spend like $12 and it'll last you for a week.
Yeah.
Who's cooking at home anymore? Oh, we want dinner. Well, let's call DoorDash and order dinner. That's $50. It's $100. You go out to have a couple drinks. Okay.
You add it up.
No,
it's a car payment at the end of the month. Right?
I don't want to talk about local businesses, and I believe in that and everything else. But you need to be conscious of this. Now, if you just took, and it takes a while to learn these skills. One of the skills is put money away every week, every month. Whether it's a 401k, whether it's in life insurance, do something and have it come out of your paycheck so you don't see it.
Yeah, automatic. Set it and forget it.
Set it and forget it. So now you have these 35-year-olds and they want to buy a house.
Right.
Now, what I found different today, because I have two in that age bracket, is now you get pre-qualified right before you buy a house.
Yeah.
How does that work?
So you need your documents up front. You got to get together with them. I'm going to say mortgage broker. And you want to look at your credit, your capacity and your collateral. That's what you're looking at.
Right.
What do you have saved as a down payment? Do you have any gift money coming in from mom or dad or a familial, family member? Today they even get a little bit more flexible outside of family member if you can prove, this is a close relationship. And then there's also, you have the myth out there, you need 20% down. You don't need 20% down anymore. So people can get into homes.
Right.
But they need to control their spending.
But they need to control their spending. But the problem is they need to plan and not like, getting married, want to buy a house.
Right.
And then have that culture shock. Now what?
Right.
So long-term planning is the key. And you understand it because you're on the forefront. I understand it, of course. And
I think mortgage professionals see it probably more than any other financial professional. Do you know why?
Why?
Why would you think? What do I need to do in order to qualify a borrower? What do I have to do?
Credit.
I have to look at the credit, so I see where they're spending the money.
We're going to talk about that right after break. You're listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I can be reached at 631-647-4694. And Bobby, how do they get a hold of you?
Yeah, Bobby Tollin. So 1995 is when I got my cell phone, and that phone number is the same. It's 516-652-8371.
Fantastic, and we'll be right back. Welcome back to the Main Street Code for Financial Success. If you were listening to us before the break, I have with me Bobby Tollin. Bobby is with Rascal Mortgage.
Yes, GoRascal Mortgage. Quietly the largest broker in New York right now.
Are they really?
That's right.
GoRascal. Yep. What a name. How'd that name come up?
It came out of COVID, the tech industry. They did some research. They really wanted to recruit, people graduating college that were interested in, instead of Silicon Valley, maybe getting into the mortgage industry. They really wanted to appeal to, the educated person that was coming out of college. And here we are, 300 brokers nationwide, licensed, I think, in 48 states, if I stand correct, and one of the biggest players with United Wholesale Mortgage.
That's crazy.
And it's incredible.
Yeah. Well, it's funny because in the insurance business, we had a lot of life insurance companies change their name. So one of them changed their name to, it was ING, and they changed their name to Voya. And then when Met decided to go out of business, they changed their name to Bright House. And I asked the wholesaler, I said, so how did they come up with the name Bright House? They spend millions of dollars finding a name.
Right.
They said Voya was taken. So, GoRascal.
GoRascal. Okay. You know what? They have a motto, and I love it.
That's cool.
Different breed of mortgage.
Right.
Is really, and it's not hunting for the best loan for the customer, and
that's important. So we talked a lot about, preparing. Credit is a big thing. People need to understand their credit and how to build their credit. And that comes with habits.
Yep.
It comes with spending habits. It comes with saving habits. So don't wait till crunch time to get your credit fixed to get a mortgage. Now, there are creative ways of selling a home if you have to sell it. There are creative ways of buying a home, and you need a mortgage expert like Bobby. And if you can give me an example of
So credit. Some people think that, credit cards are bad, right? And we see this more with the older generation. Sometimes if they're trying this maybe solution, a sale and a purchase or a second home, and they may not have a lot of trade lines. They never used credit before. That could hurt you.
Right.
The credit bureaus want to see you utilizing credit and paying it back, using it responsibly, showing trade lines that you can manage, that you can budget your money, right? You can borrow $5,000 and you can pay it back and hopefully not incur any interest where you're making that, you're paying it off in full every month as a goal. No one should be paying credit card interest. If the minute you find yourself where you're not satisfying those credit card balances on a monthly basis, you're spending too much, right?
Correct.
So and we see that more often than not. I pull, let's say I pull 10 credit reports. 8 of those credit reports are going to have unsecured credit card debt that are revolving. And that's the problem in our country.
Right. And it's funny because at one time, long time ago, I had bad credit. And now my credit is 300 points higher than it was.
Right.
One of the things I did is I had a small credit card and I put on, I think it was Chess Club or something, for $5 a month.
Right.
And every time I get a bill, I pay them $25, even though my bill's only $5.
Interesting.
And Every time it comes up, it's 20. So I have a credit every month. And
I'm surprised they don't send you a check back.
They have.
Okay.
Sometimes they do. Sometimes they don't. For a while, they weren't. But you know what? All of a sudden, my credit was like, wow, this guy, he pays ahead of time. He's not using his credit.
Right.
So that's one way. My daughter did something very interesting when she was a teenager. She got a debit card which had a little credit thing attached.
Right.
And everything she bought, she'll buy it on the credit card. And that day, she calls her bank and switches it from her checking account. So she's actually using her own money,
right,
pretending it's credit.
Well, she's building a credit history, and she's being super responsible and paying it back, not even waiting for the statement to come in the mail.
And she's got 1,000,000 points.
That's the other thing. No one's getting statements in the mail. When you get a statement in the mail with the bill, there's something about it. Every day you're looking at, I owe this, I owe this, I owe this. You get it online, it's gone. It's in your spam. If you got it, you're never looking at it again.
Right.
You're not even opening up the statement. It's a problem. It really is a problem.
So there's a lot of issues with your credit. And credit is something you should monitor regularly, like weekly.
Well,
and I'll tell you why.
Okay. Go ahead.
Fraud is so horrible right now that you must have some way of monitoring, so make sure that your name's not being purged or anything. Because how long does it take for somebody to clear their name when fraud happens?
Yeah, it's you got to file a police report. It's months. So it can foul up all your credit. So I had a situation where a bank, when this whole know your customer thing came out, with one of my business accounts, and even though the people knew me, this particular bank, I'm not going to say who they are. I could, but, I still have an account there, so I don't want them coming after me. This particular bank froze my bank account, didn't tell me. I wrote a check to myself as a payroll check in my personal account with another bank. They bounced it. Then I wrote a check off of that. They froze that, my personal account, because I'm giving them fraudulent checks, and all of a sudden, I've got a catastrophe. Luckily, I had it resolved within 24 hours because I'm on top of my game. It still must have been a stressful 24 hours.
Oh, my God. But for me to go through that and to go to that bank and then to go back to this bank, all of a sudden, it's a catapulting effect.
Right.
And you have to understand that the minute there's fraud, and there's fraud every single day, and the worst time for fraud is now, when you least expect it. It's in the holidays. People are spending money. People are buying. They're going to parties.
Yeah.
You got to be very conscious of that. But so credit is key, right?
Credit is key. They speak about the 3 C's in the mortgage industry. Credit, collateral, capacity.
Correct.
But credit is, the interest rate you're going to land on for your mortgage is going to be heavily dependent upon that credit.
So you really have to keep an eye on that score. And if you think you're going to buy a house a year from now,
right,
you should be looking at it.
Absolutely.
If you think you're going to buy a house in 6 months or 10 years from now, you should be looking at it now. You have to teach your kids. Now, most of the audience are seniors, but you have to teach your kids about credit.
Yeah.
You have to not only apply the principles to yourself,
right,
but you have to teach your kids about credit.
I remember when I was going to college, and that was the first time that I got a credit card. But it was a co-signed with my parents or my dad at the time. But he taught me. He's like, all right, got the bill, got to make the payment, and you start building those habits, right? So then you get your own credit card and you start building credit. At 18, I believe, right? 19, you start getting your first credit card, and they give you $300, $500 limit if it's in your name.
Right.
And you spend, but you pay back that bill every single month. You start building credit history. Then you maybe open up a second one as an emergency. You have 2 credit lines.
Right.
And then when you graduate college, you're going to maybe lease a vehicle. You have great credit. You showed that you had 2 trade lines. You manage these credit cards, right? And now you got a vehicle that you're going to make payments on every month. And that's how you start building credit. And listen, life happens. You had mentioned you had a tough time and you ended up having a bad credit for a little period of time and you built it back up.
Right.
People go through all sorts of problems throughout life, right?
Yep, absolutely.
And me personally, the same thing. So I've been, I went through a bankruptcy years ago when I was really, really young and in my late 20s, and I that took a couple of years to rebuild my credit. And now I go get a loan from any bank, best terms.
Right. Absolutely. Yeah, it takes a while. So creating those habits, good credit and saving. Again, we want to get back to saving. You have to save money and you have to budget. And budgeting is very important. And let's say you're young parents and you have a newborn. One of the great ways of saving and putting away, and I've seen this a million times, buying a life insurance policy, believe it or not. Put $100 a month for that kid, and by the time they're 21, maybe they're thinking of marriage, maybe they're in college, you have a big cash bucket of money you can use.
Right.
That's unbelievable. That's not taxable. That you can use for a down payment on a house. You can use, or you're getting married.
What do you think
or
people aren't doing?
Uninsurable?
Why aren't married couples with their first? Why aren't they doing that more often? You think?
Listen, people don't know. They're listening to the internet. They're listening to the space.
Right.
They're not listening to you and me. We're people.
Right.
And if people stop listening to people and are relying on the Google machine for all their answers, that's where they run into problems. You've been listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. Best way to reach me, 631